Hello, everybody. It's Paul here. Here we are, Monday, 17th of June, 2019, for session 43 of the Admiral Markets webinar series of Mastering the 4 M's of Trading. As I said, my name is Paul Wallace. I'm your guide. I'm an analyst and trader and coach, and I'm here to guide us through our session today. As always, we'll look to begin with a quick risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk which is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure to read the terms and conditions of our service. Consult a specialist if necessary to ensure you understand the risks involved in trading. This presentation and the accompanying video is for information and educational purposes only. Online educational materials are developed by Admiral Markets and distributed by Admiral Markets Group investment firms for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. Presentation and the accompanying video should not be taken as advice for investing, as they only represent the personal opinion of the authors. As of August 2018, the regulation within the European Union differs for retail clients and professional clients. In our presentation, we use demo trading accounts where all clients can still use a high leverage in a risk-free environment. Before opening a live trading account, please consider the differences between retail and professional trading terms. Retail clients benefit from unlimited negative balance protection. Professional clients at Admiral Markets UK receive a compensation of account deficits with a maximum payout of £50,000 sterling as per our negative balance protection policy. As always, there's many good reasons to work with Admiral Markets as one of your main brokers. As you can see there, for particular popular instruments of the DAX 30 and Euro US dollar, we offer very competitive spreads during main market hours. We also offer the MetaTrader platform in both its MT4 and MT5 guises, with also the wonderful Admiral Markets Supreme Edition plugin. It's also important to note that Admiral Markets is a global brokerage, and they are registered and regulated in various entities across the globe. And if you speak to your account representative, they'll be happy to guide you to open an account with the most suitable entity. As always, ladies and gentlemen, my expectation for the session is for me to educate you about the 4 M's of trading, so you can go away and begin to analyze any market and be ready to trade it, and also help you raise your self-awareness about managing risk and about managing yourself. For yourselves, ladies and gentlemen, as always, we're under time limitations, and there's a broad range of experience that join us. So, sometimes we can be a little bit limited on the breadth and depth of topics, but we'll always focus on tools that you can use tomorrow in your own trading endeavors. As always, we're looking to understand how we master the 4 M's of trading, those 4 M's being markets, method, money, and myself. When a trader is in charge of those 4 M's, that's invariably when they find themselves in the sweet spot by which they can trade successfully. If you want to understand what each of those particular M's stands for and what goes into the makeup of that, well, then you'll be able to find the earlier sessions from this Admiral Markets webinar series in the Admiral Markets YouTube page, and also the Admiral Markets global Facebook page as well. So, what we've said is that as the sort of Mastering the 4 M's of Trading series comes towards a natural close, what we've been doing and covering for the last couple of weeks is effectively looking about how we can draw our learning points from this series. We've talked a little bit about over the last couple of weeks about how we can prepare for our trading day, which is all about managing myself. We've looked about how we follow our 10 steps, having a little simple process that allows us to be disciplined and helps us with our self-awareness. And once again, that's about managing myself. We've talked a little bit about how we do our market analysis. We talked about how we set up profiles in MetaTrader 4, all of which is under the guise of the managing the markets. We've talked about some of our entry methods, some of the ways that we look to engage with the market, which is the method. We'll also talk about how we manage our risk in terms of our money, and that we'll have another quick look at before we end the series. And we've also always had a little look at, how do we record and review our trades. Those of you who know me and know me who have joined us for the sessions will realize that that invariably is, it's a key part of us growing and progressing as a trader. And that's all about managing myself. And, and all of this is really about how we manage our trading performance. How do we actually get better as a trader, which is about managing myself. So that's what we've been covering the last few weeks. And this week, what we're going to do is we're going to go a little bit deeper into elements about managing myself as we sort of look at maybe some of the sort of subconscious elements that some new traders may not be aware of. And hopefully that will give you a little bit of insight into some of the ways you act and some of the ways you make decisions in markets. And over this week and over the next week or two, we will be looking at those areas in greater detail. So, what we're going to be looking at and what we're going to talk about is a little bit of an introduction to cognitive biases. So I appreciate some people watching this, joining us here today or watching this later on demand. They may well be aware of cognitive biases. They may not actually have any understanding of it at all. But hopefully this little session here will give us a bit of an introduction to cognitive biases. And actually, hopefully, it will help traders of all levels, whether you're a complete beginner or whether you're an experienced trader. Just as I say, just understand a little bit better about how you go around actually making decisions, both as a human being and as a trader. So we look at the questions there. We've talked about, just to think about and consider your own trading. Who has never been afraid to enter a big trade for fear of taking a huge loss? Can anyone hold their hands up to that? I know I certainly can in the past. Or who hasn't held on to a position just a bit too long, okay? Just greedy for more profit to come from that market. And who can honestly say that they've always exited a losing trade? Exited a losing trade at the earliest opportunity and have never waited just another few seconds to see if it will turn around. Who can honestly say that they haven't experienced any of those elements? I know that I can, put my hand up and say that, over the many years I've traded, I've experienced all of those elements. And, I suspect that anybody who's traded a considerable amount of time will have had that kind of experience as part of their own trading endeavors. And that's absolutely fine. It's absolutely fine. It's perfectly natural. And hopefully what we're going to do over this session, the next session or two, is actually help you explain and understand that just a little bit better. So what we'll find very often, if you've been around trading long enough, is that, you'll find that most trading books, educators and coaches will tell you must learn to banish fear and greed and leave it at that. Well, that's all well and good. It's very easy for people to say that, okay? But the truth of the matter is that is a little bit like telling a smoker that the way to give up smoking is to learn to stop putting cigarettes in your mouth, right? If only it was that simple. Only that simple. The reality is that fear and greed are part of our experience as human beings in every area of our life, but also it's almost as if they're sort of amplified once we sit down to trade financial markets. And as I said, we'll talk a little bit about that more for the rest of the session and see what we can learn and how we can utilize that to help us make better trading decisions as we go forward. The truth of the matter is that, fear and greed are within us for good reason. And they're never going to leave us, okay? You will never, ever not experience fear and greed within your life. What we actually need to learn is to recognize them, understand them, and try to subvert them so that they work for us rather than against us. Now, if you remember, those of you who've joined me through this series, we've talked many a time about fear-based traders and greed-based traders, and you can find those sessions in the webinar archive section on the Admiral Markets YouTube page and also on the Facebook page. But what we're here today is to just learn a little bit, understand about how they express themselves with us and how they sort of maybe trigger some of our decision making. So if you hadn't already worked it out, your brain is trying to sabotage your trade execution, all right? I'll just say that again. If you hadn't already worked it out, Your brain is trying to sabotage your trade execution. And what that's to do is because it's knowing what to do is one thing, but having the mental discipline to do it is quite another. You've heard me talk about the importance of having that little 10-step process, okay? Because it gives you process, discipline, and self-awareness. Those are three key traits that keep demonstrating themselves in good traders time and time and time again. And if we start to understand about how, our brain is trying to sabotage our trade execution, having a little process, having just a very simple process we can follow is actually helps us build the mental discipline to do what we need to be done within our engagements with markets. So what it becomes about as a trader, as you grow and learn and develop, is having the mental fortitude to take a loss without hesitation. Remember, a loss says nothing about you as a person. If you plan that trade, traded that plan, and managed that risk, that trade was a success. And we're going to touch on that as towards the end of this session. It becomes about ignoring the nagging doubts that plague all traders from time to time and enter trades fearlessly. It's also about keeping going when the chips are down, when it feels like the market is against you. So it all becomes about that inner game that separates winners from losers in this endeavor. And this is most definitely that kind of fourth M about managing myself. That's what we're looking at here. All of that inner game. What is going on? What is going on between your ears? That's what becomes crucially important. So let's have a little bit look at the deeper side of cognitive biases. So if I was to ask you a question, and that question would be, would you say that you're in control of your actions? Would you also say that your decisions are well thought out and based on logic and reason? Or do you think that you sleepwalk through life, operating on autopilot, daydreaming about dinner or what you're going to watch on TV later? Just take a moment to think about that, whether you're here with us in the room or whether you're watching this on demand later. Just think about that. Do you think you're in control of all your actions? Do you believe that all your decisions are well thought out? Or do you find yourself sleepwalking through parts of your life? Just think about that. You may say yes to all three. You may actually have a specific one that you sort of believe is more like your experience. That's okay. There's no right or wrong answer. It's about understanding yourself, okay? The better you become at understanding yourself, the better you're able to trade in line with your personality, which is what's likely to help you sort of garner long-term success. Well, there you go, ladies and gentlemen. According to research, up to 90% of what happens in our brains happens on our subconscious level. 90% of all our thinking, decision making, and action happen without us being aware of it. Just think about that. That's quite crucial information to know that 90%, okay, of all your thinking, decision making, and actions happen without you being even aware of it. Just think about that and the implications of that. That's quite crucial. It's quite important. So, if we were to look at that, you look at that, we're actually at war, right? We're at war with ourselves. You might not know it, but there is a fight raging inside your head right now. Maybe you're aware of it, maybe you're not. It's a bit of a civil conflict between different regions of your brain. And we're going to try and have a little look at that to help you understand that better and see how it shows itself up in your own trading. So take on board this, ladies and gentlemen, this slide, because it's quite useful, it's quite important. Part of your brain is telling you to pay attention to this presentation because of all the benefits that go with it. Another part of your brain, though, ladies and gentlemen, is competing with that message. It's telling you to eat. It's telling you to procreate. It's telling you to look at acquiring supplies. It's telling you to remove your enemies. Then there is another part of your brain, the lazy part, telling you to go and switch on the telly or play a game or go to sleep. Anything that will let it shut down and avoid working. As in any war, each side thinks it's fighting the cause of righteousness. And they are partly correct. All of those elements are important. but we'll talk about is how they demonstrate and how they can actually trip us up, or how hopefully we can utilize them to help us make ourselves better traders. So when we just look at what we talked about in that last slide, what we're finding is that the needs of the many parts of your brain are trying to fulfill are all very basic. They're all concerned with making sure that you, or a direct derivative of you, continue to walk the earth. The first important part of any organism is its own survival. Any time that you decide to do something that conflicts with these basic survival needs, your brain is going to fight you. Think about that. Anytime you decide to do something that conflicts with your basic survival needs, your brain is going to fight you. And if you want to learn more about that, if you want to see it, well, then you can just look at, Maslow's hierarchy of needs for further explanation. You'll find that lots of that on the internet. If we look at that little sort of, triangle there, at the bottom we have those physiological needs, okay? Food, water, warmth, rest. These are just our most basic needs, along with security and safety. Wherever you are in the world, whatever your background, you will always do whatever it takes to secure those basic needs. Once those basic needs are met, well, then you'll move on to looking towards your psychological needs. That's about having, intimate relationships. It's about having friends. It's about having the sort of prestige and self-esteem from a feeling of accomplishment of achieving a particular goal. And the final one is that self-actualization, achieving one's full potential, including creative activities. And many would say that very good traders, they are already sat at that self-actualization, self-fulfilling part. It's about understanding where you are in that pyramid. And as we go through these sessions today and over the next week or two, hopefully that will help you get a better understanding. So let's start with, one of our first drivers, and that is, of course, fear, all right? Fear is our #1 driver for survival. That's crucial for you to understand. It's a primal emotion that resides deep in the amygdala, the oldest part of the brain. Sometimes it's called the rat brain. Okay, it's a primal emotion. And fear is so successful at ensuring the continued existence of life that it has survived every step of our evolutions as human beings. Fear is so deeply embedded within us that we can never hope to eliminate it, okay? You will never escape fear. Instead, you must learn to control it, or better yet, even use it. Use it for your own good. Many of you will have understand fear. Maybe you'll be able to explain how it feels to you when you experience fear. Maybe it is deep physical experience. Maybe you'll feel the nerves in your stomach. Maybe your hands will shake. Maybe you'll feel sick. Okay. Other people might feel it in different ways. The psychological need. Maybe their breathing might get harder, or they might actually start to sort of shut down. Okay. There are many different ways to understand how we experience fear, and it's about understanding how you do it. Because when we trade, remember. When we trade, okay, we're encountering fear and greed and hope all the time in the markets. So on the flip side of fear is greed, all right? And almost all of the problems we encounter in our trading are born of fear. Just think of that. Almost all of the problems we encounter in our trading are born of fear. Even greed is a response to that emotion. Greed can be traced back through our evolution as humans. In the modern society, there should be more than enough to go around, okay? And yet the greed response is etched into our amygdala part of our brain. And it's just that battle between fear and greed, it racks all of us traders all of the time. And it's about understanding and working with it, understanding how it shows up in your own experience. Fear is the engine that drives our subconscious. Humans have developed a number of higher level behaviors that whir away in the background, informing our choices and nudging our decisions in a certain direction. Most of the time, we're blissfully unaware of them. We may not even realize they exist at all. Remember, I was talking about maybe you're just operating on autopilot. These behaviors, they are called cognitive biases, right? It's where those humans develop a number of high-level behaviors that whir away in the background, forming our choices and nudging our decisions. And that's the cognitive biases. And we're going to cover a fair few of them a little bit today and also over the next couple of sessions. Remember what I said, you can never escape fear. You can't switch off your fear engine, but we can subvert it via these higher level biases. But first we need to know what they are and what they are trying to do. By being able to understand it and see them, that is what will help us make better decisions. So here's an interesting one, okay, a very strong one that traders experience all the time, and that's called loss aversion. So if fear is the engine of our subconscious, then loss aversion is the sat nav. Loss aversion steers our actions, calling on the power of our fear to protect our assets. The thing is, loss aversion can play havoc with our trading performance. For fear-based traders, it discourages us from taking risks that are inherited in trading. For greed-based traders, it can drive impulsive trading and a reluctance to crystallize a loss. And that's what we see very often with new traders. They take a trade, the trade doesn't work out for them, but they won't close the trade because they think it will come back. They hope that the trade will come back. What that trader has experienced, okay, is loss aversion, because until that loss is actually crystallized, until the trade is closed, well then really in our brains, we don't believe that loss is real. We are trying to avert the loss. We're experiencing loss aversion. But invariably, that doesn't help traders in the long run. And in fact, it can be very, very detrimental to your trading performance and in fact to the sort of longevity of your trading career. So one of the challenges we have as traders is that we feel the pain of loss 1.8 times more than the pleasure of a gain. Think about that. You feel the pain of loss 1.8 times more than the pleasure of a gain. And that is why traders drive themselves towards high hit rate trading methods. That is why, if you go onto the internet searching for particular, trading strategies or trading setups, there's lots on there that will offer you 80, 90, 95, 97, 98, 99, 100% even hit rate in terms of the time being success, because they know traders, uneducated traders, will flock towards that because they will do whatever they can to avoid pain. And if they feel the pain of loss 1.8 times more than the pleasure of a gain, they will do anything to avoid that. Humans want to avoid the pain of loss in everything, not just in trading, but in every aspect of our lives. So what we see as traders is that fear, greed, and loss aversion are perhaps the sort of three most prevalent emotions and biases that we experience as traders. They are very hard to change as they're deeply embedded. They affect everyone, not just traders. It is part of the human condition. And what we'll do is we'll look to subvert their power rather than fighting them. So let's have a little look at some other particular trader biases. We'll cover one or two here, and then actually over the next week or two, we'll cover more of them. But even if you just can take away from today, understanding how fear, greed, and loss aversion can drive our behavior, that is a crucial point to know. So here's an interesting one, outcome bias. Outcome bias is our tendency to judge our decisions based on their outcome rather than the quality of the decisions themselves. And that is, I see this all the time with new traders, okay? All the time with new traders, is that they just focus on the outcome of their trade. They hope their trade will be a winning, profitable trade. And when it isn't, because all traders have losses, well then invariably what happens is that, you know, the outcome bias rears its head, and invariably we sort of beat ourselves up when we don't take a winning trade. And actually what good traders are doing, what good, solid, professional traders are doing, is that they are focusing on the quality of the decisions themselves rather than the outcome of the trade. And here's one of the sort of underlying beliefs of good traders is that anything can happen in the market once your trade is triggered. You can have the most beautiful trade plan. You can have the most beautiful analysis, whether it's fundamental or technical or sentiment or whatever. You can have the most beautiful analysis. You can take your trade in, let's say oil. Let's say you trade oil. You're on the for the long on oil because that's what your plan is telling you. It looks like a great trade. And then an hour later, Mr. Trump puts out a tweet about Iran or something like that, and the price of oil just absolutely plummets and it takes you out at stop loss. Now, most new traders, uneducated, amateur traders, would focus on the fact that, the outcome of that trade was a losing trade, that they would use that as a sort of almost like a stick to beat themselves with about, you know, how they're no good as a trader, etc. Just use that to get down on themselves. Whereas a good trader will know that anything can happen once a trade is triggered. It's about focusing on the decisions you make before the trade is triggered. Did I plan my trade? Did I trade my plan? Did I manage my risk? If you did those three things before the trade was triggered, well then, you know, you did all the elements that you could actually control. And that is key. So if you find yourself, look at your own trading records. And if if you're finding yourself just looking at how you act and react regarding the outcomes of your trades, well then just be aware that you might be experiencing an element of outcome bias. And what might be more useful is for you to look at whether you made good decisions before the trade was triggered. Did you make good decisions to take that trade? And if so, well then that trade was a good trade, regardless of the outcome. So, as it says there, we've all entered trades that we know are substandard, right? Sometimes those trades are profitable because there's just random effects. But because of the aforementioned biases we have, we rate the trade as good rather than poor. So we congratulate ourselves for the good trade because it's a winning trade, rather than reprimanding ourselves for our poor judgment. And that's another side of outcome bias. It's just about, when we do get lucky, we sort of, think that that makes us a good trader. Whereas in fact, what we want to be focusing on is the quality of our judgments and decisions beforehand. The danger is that next time a substandard setup comes along, we will be much more inclined to take it. A substandard setup is still a substandard setup, regardless of what happened in the last trade. By working on the previous biases, we diminish the chance and power of outcome bias. It's about recognizing, did I focus on making good decisions and good judgment in actually that trade decision? So what we'll do in the next session or two is covering a lot more of those biases that you need to actually be aware of. But as always, just to finish off for the last few minutes, as always, I like to quickly go through our 10-step plan. Whenever you look at a chart, open a chart on your Admiral Markets MT5 or MT4 platform, your step one is you define your levels of support and resistance. Step two, define if there is a trend. Step three, wait to see how price reacts at those key support and resistance levels. Step four, when it's there, look at what price action signals that you are given at those levels. Step five, just be aware, is it part of a bigger chart pattern? Step six is about risk. Define your risk, accept it, and stick to it. Step seven is about your rewards. Are you using target or are you trailing? Know what your exit is. Step eight is about recording. Make sure you always keep scrupulous records of your trade, and you know that I've always talked about that throughout this series. Step 9 is about reviewing, okay? Improve your performance by debriefing your trades. Step 10 is about repeating. Consistency and discipline are key. And that is what we see in traders, good traders, time and time and time again. Consistency and discipline. Very hard to be consistent without being disciplined. Very hard to be disciplined without being consistent. They help you. They both help each other. So remember that kind of big picture recap, all right? Remember to manage those 4 M's of trading: markets, method, money, and myself. Are they all in alignment? If not, well, then don't expect outsized returns. Constantly monitor those 4 areas within yourself. And as over the next session or 2, you learn and understand more about cognitive biases, you'll be able to sort of see, you know, when and if you demonstrate that, or whether you can even recognize them within yourself and your own trading performance. Because once you start to see it and recognize it, you'll find that you'll get a fascinating insight into your decision-making processes as a trader. So, as always, ladies and gentlemen, you know, you're very welcome to sort of get in touch with account representatives and have a conversation with them if you'd like to call them. You can get hold of them on the number 02035 140 756, or contact them email at hello@admiralmarkets.com. As always, you can find this session and all the preceding ones on youtube.com/admiralmarkets, or in the back on facebook.com/admiralmarketsglobal. So, you know, what we'll do for the last sort of 5-10 minutes is I'll just do a very, very quick market recap, just looking at 1 or 2 of the big major pairs, just to give you a little bit of insight. I appreciate that for those of you who join us or those of you who watch us this week, it might be useful just to see how we look at the charts. If you'll bear with me 1 moment, I'm just going to switch across the charts, and we'll just do a couple of minutes of market analysis to finish up for you, ladies and gentlemen. So hopefully what you can see is you can still hear my voice, you can still hear my see my charts, and what we're looking at is, as always, you know, that's what we've talked about the last few weeks is, okay, the dollar index, okay. As always, I just, you know, when I'm looking at our charts, we just want to basically have a look at how they're doing, all right. So this is dollar index weekly chart. We can see we pushed to new high. I'm just going to draw in a level of support resistance there, because that was just because it's an extreme of this year. You can see all the other levels that we've had over the last couple of years. Interestingly, you know, we've come back, having hit that highs, we kind of fell back towards this trend line where also with the 50 period moving averages, and we bounced off that last week. If we go down to the daily chart, I'm just going to take this fib off because it's what we were looking at from one of our trades the other week. So, you know, we had a trade here because we had a key reversal, 2 key reversals here, which also gave us a double top and sort of driving that down towards the daily 200. But you can see that, you know, we got a little bit messy, a little bit scratchy there. But we've had a bounce, and I'm now interested to see, well, will price get up above the 20 and 50? Okay, if it does, once again, that could be bullish. Or alternatively, how will price react here? That's what I'm looking at. How is price going to react? Is that going to just roll over and fall away? So let's see how that plays out against the euro dollar. So if I just go to the weekly chart first, go to the daily chart. And what we're looking at there is on the, just change this so it makes it just a little bit clearer for us. You can hopefully see that a bit better. On the weekly chart, we can see that, you know, price bounced here off the 111 area. Okay, for those of you who used to join us on the real-time daily trading ideas, we know we had a trade idea here. It's exactly the opposite of what we saw on the dollar index. We had a bullish key reversal candle here on euro dollar, followed by a morning star formation, which also gave us a sort of kind of a double bottom and almost like a triple bottom. You know, and those of you remember, we sort of talked, we had a trade on, we were long about 111.50, riding it up to 113. We can see, you know, it actually got up to almost like 113.50, but we've had a little bit of a rollover there. We've had, you know, what have we got there? You know, a key reversal, okay, key day reversal there. That's what we've seen there, and we've actually had a nice little bit of a drop down away from it there, okay, and back towards the 50 there. And, you know, what I'd be looking at there is that here, you know, we're looking at, do we have the power of 20 here? Okay, 20 period moving average. Okay, 20 period moving average was acting as very nice, you know, sort of dynamic resistance. The question is now, will it act as good support? Will price actually continue to bounce up? So we'll be watching that over the next day or two to see how that forms itself. We've also got to, you know, to add to that, dollar against the Swiss franc. Well, you know, dollar against the Swiss franc, we had, you know, if I just go up to the, actually, if we go up to the monthly chart, you know, what we've been looking here on the dollar Swiss franc is that, you know, we've been up here, the parity level here, okay, is there, and we've had over the last couple of years, every time we've tried to get up above it, it's come back down. We did it, okay, a couple of months back, and it's come back down. But look at the weekly chart, we tried to get up there, put in a double top, and then it rolled its way down, and, you know, it eased itself down here. But now, once again, we had a little bit of a bounce, just not like we'd see on the dollar index. And I'm just looking at, we're just under parity here at the moment, and that's something that we can keep an eye on, just to sort of see how price reacts at this particular level. So, you know, as I said, we're just at low parity level, and just keep an eye on that. If we look at pound against dollar, well, you know, pound against dollar has been, you know, one-way traffic for the last couple of weeks and months. You can see it there, up from being 132.80, we've just, you know, run our way down. We're sort of nudging our way down beneath 126 now. That's what we're looking at. The daily chart, we can see ourselves, you know, is just continuing to do that. We thought we might actually have a bit of a inverse head and shoulders forming there, but it's just still just nudging its way down further. I know some of you are traders of Bitcoin. Bitcoin's been kind of curious and interesting, hasn't it? You know, weekly chart run up there. Okay, we talked about, you know, getting above 8,000. Could it hold above that? We've seen some quite, you know, pretty much you'd call that market shenanigans there. But over the last couple of days, we've had a real sort of shift towards that. Is that because of some of the strife we've seen in Hong Kong and people trying to get around capital controls in China? I don't know. All we can say as traders is that that has been in a pretty strong, you know, trend upwards, and I wouldn't surprise me if we now sort of just headed our way towards the sort of 10,000 big round number. That's what I'd be expecting from us there. And just to finish off on gold, okay, gold has been interesting in that, you know, we kind of you know, we sort of bounce between, you know, the kind of 113, 112.80. We can see there's lots of support there. Then, you know, the last couple of weeks, we've bounced our way up there. We thought maybe that had really run its legs, but we can see, you know, we're bouncing back up into this kind of bearish order block here. So I'm waiting to see how does price react. There's a big pin bar there, okay. Just watching to see how does that price, you know, it's the 4-hourly chart. You know, how does price react there, okay. If it rolls over, well then, you know, I'd be looking to be short back towards that 1,300 level. That's been a pretty strong level there. So there you go, ladies and gentlemen. There's just a quick little bit of you know, market review there, just to finish us off. As always, thank you very much for joining us. I wish you the best of success in your own trading, and I look forward to speaking to you next week for one of the final few sessions of the Mastering the 4 M's of Trading webinar series. Trade well, and I'll speak to you soon. Many thanks.